So I was able to record live what I was trading today, but I wasn't able to add sound. So I just recorded the screen and now I'm just going to speak over my trading. So now that I'm logged into my account, so the first thing I normally do on a Monday is sell a put spread on the SPY. So I'm looking up the SPY. I'm going to look at the straddle just to get the value of the expected move at July 15 expiry, because that's 30 days to expiration. So it shows here that at the 298 price, that's the SPY was trading at 298 at 931. The value of the straddle is about $23. So I took 298 minus 23, it gives me about 275. So I'm picking a 275 short strike and a 270 long strike. So that's my put spread. I'm doing 2 contracts, and you can see that I can collect anywhere between 78 and $1. So I went with 90 cents. It didn't get filled, so sell to open, buy to open, 275, 270. Trying to collect 90 cents. It's not going to get filled. Here, send order. And now I'm going to go back to orders and maybe just modify it a little bit. And there you go. I'm going to decrease it here, probably 88 or 89. I don't remember. Send order. And does it get filled? Yeah, so it got filled at 89 cents. So I sold the 275, 270 July 15 put spread for 89 cents. So as you can see, as the SPY is dropping, it allows me to sell an even further put spread on the SPY, making it safer and collecting okay premiums. Yes, my existing put spreads might be in trouble, but the new ones are much stronger. So it's just a matter of mitigating the existing put spreads, reducing max loss on the existing put spreads. So that's what I'm doing right now. So I'm looking at my existing put spreads. I'm going to have to sell a call spread against probably the July 10 one, the 304 short strike on the put, because it's completely breached. The SPY is at 298, 297 right now. So for sure I have to do something. I have to take action on the 304 put spread. So I'm selling a call spread against it. So basically I clicked create order and I changed the put to call, and I think I'm going to be choosing a 315 strike. I'm not sure which strike I chose. We're going to see right now. So I'm looking at the at the money. So I'm looking at the money value of the call and put option. So call is about 10. So I'm going to try to go 20 points away. But it looks like, let's see, I don't remember what I went for. So I went to the 315. So I went about 20 points away, but a little bit less than 20 points. So I sold the 315, 320 call spread against my existing put spread that was at 304, because the 304 is tested. So I'm selling call spreads against it as a hedge to reduce max loss, because right now my max loss is $5 minus whatever I collected from the put spread. So I'm trying to collect extra credits without adding risk to the trade, because I can't lose on both sides. I can only lose either on the put side or the call side. So any premium I'm collecting from the call side is considered extra credit without adding risk. So there you go. I'm selling the call spread at 315, 320, 2 contracts, equivalent to the existing put spread on July 10. And it looks like it got filled. I collected $1.07. So I collected $1.07 on that trade. So now I've got an iron condor. Instead of having a put spread for July 10, I have an iron condor on July 10. I'm going to go ahead and cancel my existing order to close the put spread, because now I don't just have a put spread, I have an iron condor. So I'm just canceling it. And I think I'm going to cancel the July 6th vertical put as well, but because the July 6th vertical put has a strike that got breached, the 303 got breached, and the SPY is at 297 right now. So definitely I have to take action. I have to do something. Although I do think that eventually it can come back up and become a winner, but I don't know that. I don't want to make assumptions. So I have to take action because my short strike got breached for the July 6th put spread at 303. So already I have 2 iron condors right now. So I got 2 put spreads that I turned into iron condors by selling call spreads against them. So here I'm just looking at how much I collected. All right, so right now I'm just putting my good till cancel order, limit order on the put spread that I opened today for 89 cents. I'm going to try to close it for 45 cents, so almost 50%. So buy to close, sell to close. I'm trying to just close it. I'm just putting the order so that it closed automatically. I don't have to watch it. I mean, it looks like it has a good chance of winning, right? 275 short strike for July 15. Looks like it has a good chance. So now the good till cancel limit order is on. Now I'm gonna have to adjust the put spread on the SPY July 6th, the 303 short strike. Looks like I'm just hesitating a little bit. All right, so create order. I'm gonna change the put to a call. So basically I'm just keeping the same format, same expiry, and now I'm going to take probably a 320 call spread. So how do I choose my strikes? Basically, there's nothing really. I just want to be far away so that I have a chance to win, but also collect enough premiums to help mitigate the situation, right? So I'm choosing a 320, 325. This one's a bit further than the other one I just did on the July 10th, I believe, the 315. I don't know why I went with 315. 315 is kind of close. So anyway, so this one I went with a 320, 325 for 53 cents. I'm trying to collect 53 cents. I think I'm going to collect a little bit more. Yeah, so I ended up collecting 56 cents for this call spread. So now I've got 3 iron condors. I've got 3 put spreads initially that were turned into iron condors because I sold call spreads against them to help mitigate the situation, because max loss would be too high if I do nothing. And SPY's at 297, even almost 296, it looks like 298. Now, of course, at the end of the day, SPY ended up closing at 307, but in the morning, I have no idea what's going on. I thought maybe even the SPY could continue to drop lower. But that's why I'm trying to be mechanical, not make assumptions. And I just sold a call spread a bit far away, giving myself room in case the stock decides to go up. So here I'm trying to sell a naked put on IWM. It's something I'm trying to get into. I'm trying to get my feet wet with naked puts. So I'm looking at IWM because capital requirement will be smaller. So right now I'm looking at the straddle. I'm looking at the expected move value. So the straddle for June 19 expiration. So I'm going 1 week out. The straddle is about 9 points. So I'm going to end up selling the 125 put. So that's what I'm doing right now. I'm selling a naked put. So it's not a spread. It's just a naked put, June 19, 125 put on IWM. Trying to collect $1.43. So one contract is $143. And the reason I chose IWM is that I want an underlying that I know will eventually come back up. If it gets tested, if my option goes in the money, I know that IWM eventually will come back up. And the way that I would mitigate, or the way I would manage this trade if it goes against me, is that I'll just keep rolling for a credit. I'll keep rolling forward for a credit, knowing that a naked put can be rolled forward for a credit, knowing that IWM will eventually come back up, even if it gets in the money. So here you can see it got filled at $1.43. Now the sad part about this trade is I think about maybe 2 hours later, I was able to close this trade for 30 cents. So I didn't even have to wait. Actually, I didn't close it yet, but I was able to close it for 30 cents. So that's more than 50% profit in the same day, and it's a 1 week expiration. So I still own it. Maybe I'll let it expire worthless. Maybe I'll close it tomorrow for, I think it closed for about 25 cents. So it's really ridiculous. It's crazy market. It keeps going up. So now here I'm looking at my covered call on the queue. So as you can see, I am down on the covered call because my short strike is 213 and the queue is trading at 233, and my purchase price on the queue is 221. So I don't want to lose my shares at 213 because my purchase price is 221. So I'm actually thinking of rolling the call option forward for a credit and trying to move the strike higher, trying to get closer to the current market price, or at least to my cost price. So I'm trying to go to 214 or 215 strike. So let's see what that gives me. So that means I would have to buy back the June 26th call option and sell the July 2nd, let's say 214. See, right now it shows I can't even do it for a credit. So I'll have to go further out, maybe July 10th or July 17th. So at July 10th, at a 214 strike, I can collect a credit. Let's see, at 215, I cannot collect a credit. So if I go to July 17, so I'm going even further out, at a 215 strike, I can collect the credit. So that's good. At 216, I cannot collect the credit. So 215, I can collect the credit between 23 and 76 cents, as you can see there. So I'm still deciding whether I should take this trade on or not. And I'm thinking, if I take it, two scenarios can happen. If the Qs go up, then I'm glad I took it. If the Qs go down, I'll be a little bit disappointed because I could have gotten a better price, but at least I don't lose my shares lower than what I paid for it. So I think it is a better idea to go for it, but anyways, I'm still hesitating, so I left it, and now I'm looking at my RSP. Now here's a trade. I'm doing the same thing with IWM, but IWM I had a short strike of 150 on the call side, and it's looks pretty good, right? It's completely safe because IWM is trading at 134 and my short call is at 150 for this Friday, so 4 days away. So I got greedy here. I decided to bring my short call closer to collect more premium. So here's what I'm doing. I'm buying the June 19 call that I already have at 150 so that I can sell at the same expiration, June 19, so I could sell a strike lower, but still safe. So I'm trying to pick a strike that's far enough for this week to be considered safe, but I'm doing that so I can collect more credit. So I'm being a little bit greedy. I already collected a credit from selling the 150, but because IWM dropped, my 150 call is very profitable. So I'm trying to collect extra credit. And here I'm trying to decide if I should go for the 145 or something higher. So I'm looking at the 147 right now. I can collect about 20 cents or $20. But after commissions, it might not be worth it. So here I'm just deciding if I take the 146, I can collect about 30 cents or $30. So I'm going to end up going with the 146. I decided to place an order a little bit higher. I'm going to place it, I think, at 36 cents, if I remember. We're going to see that right now. But yeah, I'm definitely being greedy because I already collected credit from the 150 call. So I'm looking at the price of IWM right now, 134.62. So I'm trying to feel which strike would be safer. So is 146 safe? I mean, I've got 11 points to go till Friday. Is it safe to sell the 146? I already have the 150, but it's worth 13 cents, the 150. So that's what I'm trying to sell a call strike lower just to collect more premium. So I'm going back and forth between 148, 147, 146, even 145. I was really thinking about 145 because the premium was higher. There you go. There's 145. I'm looking at Delta. Delta is about 18. But I don't trust Questrade's Delta. I think sometimes it's all over the place. I'd rather use a different platform to see the Delta, or I can look at Questrade IQ Edge to see the probability of in the money percentage. That one's more accurate. So anyways, so I'm going to end up going with 146. But really, IWM has been good for me in terms of covered calls. I'm not losing anything on IWM, and I keep collecting credits for free with IWM without losing anything, without costing me anything. I bought the stock at 151, it dropped to 100, and ever since I'm selling weekly out of the money covered calls on it, and I never had to buy it back for a loss. So basically I'm collecting free credits while I wait for the stock to come back up, which it did. It has come back up, but last week decided to erase everything and drop back down to 134 right now. So right now I'm just being greedy again, and looks like I'm going for 132 cents. No, I think I went for 36 cents. So I'm buying to close the current one, which is the 150 call, which is the one that I currently have shorted, so that I can sell a new one. I could sell the June 19, same expiration, but I'm bringing the call closer. So making it riskier, but collecting a credit of 30 cents or 32 cents. I think what I'm going to end up doing is changing it to 36 cents. So here I'm just thinking about it, hesitating, wasting time. So because I was hesitant, I said to myself, okay, let me put not an exaggerated order, but a higher order. And if it goes through, then it goes through. If it doesn't go through, then it's not meant to be. That's what I usually do when I'm hesitant, when I can't decide. So that's what I ended up doing, asking for 35 cents. So buy to close the June 19 150 call and sell to open the June 19 146 call. So now for me to win on this, IWM needs to stay below 146 come June 19. It's already at 134. So to me right now, it looks good. I didn't know that IWM would jump from 134 to 142 in the same day. So now I'm going back to the queues, thinking of rolling it, and I think that's what I'm going to do. I'm going to end up putting an exaggerated order, because like I said, that's what I do when I'm hesitant. I just put an exaggerated order. If it goes through, I'm like, okay, that it was meant to be. If it doesn't go through, then it's not meant to be. So I'm going for the 215 strike. I'm going for the July 17 expiry, and I'm going to ask, I think, for 80 cents. So like I said, basically, if the queues go up, then I did a good trade. If the queues go down, then I didn't do the best trade. It was a good trade, but it wasn't the best trade because I could have collected more. But my goal really is I don't want to lose my shares at 213 when my purchase price was 221. That's my goal. So I'm trying to catch up to the current market price of the queue. That's what I'm trying to do. But it just keeps flying. It keeps running away. I can't catch up to it. Like just to catch up to 215 strike, I have to go to July 17 call option. So I'm going to ask for 80 cents, buy to close the June 26th, sell to open the July 17. I'm moving from 213 to 215 strike and collecting 80 cents. That's what I'm going for. I left it open. If it gets executed, it gets filled. Great. If it doesn't, well, then I'm in the same position. And if I check back on my RSP, my IWM did not get filled yet. So to recap, my SPY put spread ended up being very profitable this morning. I could probably already close it for 60 cents, but I'm not going to close it. I sold it for 89. I can close it for 60 cents, but that's because the market jumped. My IWM naked put also did very well and went from $1.43 to 21 cents. I didn't close it yet. So yeah, so these were the trades that I made this morning in probably 15 minutes. So if you have any questions, leave them in the comments section below. Like always, if you can open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back, depending on your deposit. The other one gives you $50 in free trades, regardless of your deposit. And if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.